And we got 330 million Americans out there. How many people are in the Federal Reserve? Like 50 that make the decisions? Well, we outnumber these folks, and if we make enough noise, we can fix this stuff. And
Absolutely.
even if we don't make enough noise, intrinsically, even in the marketplace, it's arguable that Bitcoin alone is going to fix this stuff because if Bitcoin continues to go up in value, it's just going to suck all the value out of the fiat. The fiat people aren't going to have power anymore, and the Bitcoiners are going to have a lot of power. And I got to tell you, I would much rather have Bitcoiners running this country than have all the fiat lords running this country. What needs to happen is fiat needs to get marked to market. I mean, all the boomers grabbed all the fiat. Well, the fiat's worthless. The boomers don't know that yet. But they're going to find out.
Bitcoin's predicted rise to $110,000 has reignited concerns of a financial bubble, with skeptics questioning whether this surge represents genuine economic transformation or speculative mania. While proponents view Bitcoin as a decentralized alternative to the fiat-dominated financial system, critics argue that such rapid value escalation could destabilize markets and erode trust in digital assets. In his interview, Lawrence Lepard highlights Bitcoin's disruptive potential, describing it as a revolutionary tool to dismantle the centralized control of elites. By empowering individuals over institutions, Bitcoin challenges the fiat status quo, raising alarms among those tied to traditional financial systems. However, this very disruption has sparked fears of speculative overvaluation, with critics warning that Bitcoin's meteoric rise could mirror past financial bubbles. For older generations reliant on fiat currencies, Bitcoin's ascent underscores the fragility of centralized systems. The realization that fiat currencies may not retain their perceived value places Bitcoin at the center of a broader societal shift. Yet the question remains, is Bitcoin's $110,000 target a symbol of progress or the hallmark of a speculative bubble poised to burst? As debates intensify, the future of Bitcoin's value and its impact on global finance remains uncertain. Advocates call it a reimagining of value and power, while skeptics see a volatile asset fueled by hype. The $110,000 milestone, whether realized or not, will undoubtedly shape how society views financial accountability in a digital age. Let's watch clips from Lawrence Lepard's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So there's a lot of immorality and corruption that comes out of having this broken money. And, the people who control the money, I mean, it's patently absurd that we have 12 people that can set the price of money. I mean, the price of money is the most important price in any economy because it drives capital allocation decisions, which then drive the correct productivity and outputs as a result of, you want to invest in the right things. And so if you distort the price of money, you make malinvestments and you're wasting money on things that don't make any sense. And that's a cost to society. If we had not had all of the distortions that we've had, we would all be living so much better. If you look at all the technological innovation that's taken place in my lifetime and in your lifetime, I mean, we all should be working 20 hours a week. I mean, it's unbelievable how much technology has improved everywhere. And yet, because the money's broken, we're all still working like slaves because, we're on this hamster mill, hamster track of trying to stay ahead of inflation, which is always eating us up. It's a real problem. And everyone feels it, from the top to the bottom. That the one difference though that I'll point out, and you and I discussed before the show, is the people at the top, know the game. They understand what's coming. They understand how to play it, and they can make inflation work for them. I mean, they actually can get, inflation. The working person, the average citizen has trouble with inflation. Their salary is fixed. When things cost more, their lifestyle gets worse. People at the top, they can actually root for inflation because they can borrow cheap, and the inflation pushes up the value of their assets, and that's why the wealth inequality is as it is. So the Keynesian economics school and the Federal Reserve and the federal government, I mean, they're all thick as thieves. I mean, they're all in the same, in the same camp. And so, if you're a Fed economist, you get paid by the Fed, you get big consulting contracts and gigs, you're part of quote unquote the system. And you get rich appointments afterwards. You can, you sit on board seats, et cetera, et cetera. I mean, Larry Summers, who was the president of Harvard University as an economics professor there, he made $20 million in consulting fees, consulting to Wall Street, when he was Secretary of the Treasury. I mean, before he was or after he was Secretary of the Treasury. So, I mean, the point is that there's a kind of a system of bribes and corruption. I mean, how do these people go to Congress making 200 grand a year and end up worth millions? I mean, it's because they get things from other parties that are self-interested and that pay them to bend the policies and the rules in their favor. And so, the Fed has just totally dominated the economics discussion, and they've tried to make anyone. I mean, the Austrian model perfectly explains and predicts what's happened to our economy since the founding of this country. And the book takes you through that if you're willing to wade through. There are two chapters that some people have told me they're kind of the rough sledding, because I really dig into the history. I started 1789. I take you through all the financial developments up to the present day. And if you look at it, the Austrian model could have predicted it and explains all of it. And the Keynesian model is wrong and doesn't predict any of it and doesn't explain all of it or any of it. And it's almost laughable how bad they are. And I've got tons and tons of examples in the book. And yet they continue in power. And the reason they do is because the government supports them, because that Keynesian model allows the government to overspend and have the goodies to hand out, so that when you go in as a representative making a couple hundred grand a year, you end up worth millions. And so it's just a big corrupt. It's like we're dealing with the mob, except it's called the government. and you know what? We don't have to put up with it. We just don't have to put up with it. But we can't be stupid about this, because I mean, the mob promises certain people certain things, and that buys a vote, and the vote might be, it's amazing how little people can get bought off with, right? I mean, okay, send me a $2,000 stimmy check and I'll vote for you. Meanwhile, out the back door, they're robbing you, many, many times that $2,000 in terms of inflation and other stuff. And yet you'll be bought off by that check. It's ridiculous, right?
Absolutely.
So people need to understand what's really happening. That's the problem. I think that the average person, I don't know, take an average. I mean, I have my teeth cleaned the other. Take my dental hygienist, right? I mean, she does fine. She's really good at cleaning teeth, right? She doesn't. I mean, she was bitching about how everything is very, very expensive. I get it. I could completely relate. I tried to orange pill her, but the point is, her view was she didn't. She doesn't think about these things. I mean, this just isn't. It's not her area of expertise. She's not interested in it. She's interested in her kids and her family, and she goes to work and she does her job and she comes home, but she knows her groceries cost more and she doesn't know why. And so maybe she turns on the TV and somebody, Bernie Sanders says it's greedy corporations. Well, no, I mean, that's not really what it is. There's a bigger issue. And it's a little complex, because these people who've done this to us, they're sophisticated. They wear nice clothes. I was just watching Jay Powell this afternoon, and, I mean, if you didn't know better, you would think, gosh, look at this thoughtful, intelligent man describing to me what he's doing with monetary policy that makes a ton of sense. Okay. That's what, if I were a dental hygienist looking at it, that's the image that he would be projecting, right? If you're Larry looking at that, you're going, you're a idiot. You don't know what you're doing. I mean, you've lied to us here and you've lied to us for years, and we know it. So, but I know that because I understand where the bones are buried, and because I've been watching the system and studying it for years. And so I'm trying to give that knowledge to that dental hygienist, so that she will say, the next time some sound money candidate comes around and says, we need to shut down the Federal Reserve, because we do. I'm going to vote for that person, because I think the Federal Reserve is causing a lot of my problems. And I think the odds, the number of people in the United States who understand that today, it's very low, sadly.
Lawrence Lepard exposes the flaws of centralized fiat systems, highlighting how inflation silently robs wealth from the working class while enriching elites through cheap borrowing and asset inflation. He critiques the Federal Reserve's unchecked power, where a few dictate the price of money, leading to systemic inequality and wasted resources. Advocating for sound money principles like Bitcoin, Lepard calls for public awareness and action to dismantle corruption and build an equitable financial system that empowers everyone, not just the elite. He further describes Bitcoin as a revolutionary asset with immutable scarcity, unlike traditional commodities like gold or oil, With its fixed supply of 21 million, Bitcoin defies dilution and sets a new standard for sound money. Lepard criticizes distractions like meme coins, urging focus on Bitcoin's transformative potential. As institutions like BlackRock embrace Bitcoin, Lepard predicts a digital gold rush, reshaping global finance. He warns skeptics, ignoring Bitcoin now risks missing out on its monumental impact. Let's watch more clips from the interview.
When the price of any commodity goes up, the suppliers of that commodity will change their behavior and make more of it in order to bring the price down and balance supply and demand. And so, as an example, if the price of gold doubled tomorrow, we would drill for, find, and produce more gold. If the price of oil goes up, then it makes marginal oil fields profitable, and so oil drillers will drill them and produce more oil. So think about that. The supply price goes up, supply goes up. That's the law of most commodities, okay? With Bitcoin, because you have 21 million fixed supply, it's a very unique commodity. Doesn't matter what the price does, the supply can't go up. The supply just is the supply, period. It's fixed, it's algorithmic, it's decreasing every 4 years in terms of its new issuance. So we've never seen something like this before, ever. There's never been any form of money that could not be diluted. I mean, even gold, which used to be the soundest form of money, the supply grows at 1.7% a year. Multiply that times 55 years, and you've doubled the amount of gold on the Earth's surface, okay? So, but Bitcoin, there'll only be 21 million. And I think that what people are missing, and I talk about this in the book too, all the crypto noise, sadly, it's just, I hate it. It's just, Dogecoin, SBF, all that crap is just so annoying and distracting because it's just total horseshit. And it detracts from the one pure signal technological innovation here that these guys figured out, or this person. I tend to think it's guys. I think Adam's one of them, by the way. but you probably do too. They created immutable digital scarcity. And guess what? At first glance, you say, oh, so what? Who cares? Well, when it comes to money, that's a big deal. That's a really, really big deal. And, I don't know. Before Google existed, did anyone even know what the concept of a search engine was? The internet didn't exist. Google didn't exist. But now, it's part of everybody's daily life. Everybody uses it. Everybody needs to use it. It's a network, same idea. It's a new innovation that, is going to completely change the world. And, my advice to people is ignore it at your own peril. I've been interacting with some people on Twitter, people I respect, very smart investors, macro people. And they think it's a bubble. And I just say, guys, you're not don't let the crypto noise distract you. Think about what this technology really is. And then ask yourself, okay, you're now aware of it, so you don't have an excuse. There'll be people who aren't aware of it today. When it's worth $1 million a coin, they'll say, oh, shit, I didn't know about that, and I'm really sorry I didn't. Okay, fine. But these are true, legitimate professional investors who are aware of it. And I said, how are you going to feel when it's $1 million a coin? Because it's going there. And then again, how are you going to feel when it's $10 million a coin? Because it's going there too, not over longer time frames. So I really do think that people are going to be shocked what happens here. And as we've all seen, some people, just the fact that it's over 100,000 has gotten a lot of people really salty because, they just can't get their heads around it. But I would just advise them to get rid of their ego and bend the knee and understand. Look, I don't have a lot of love for Larry Fink because I think he's a kind of a creepy guy and a fiat master, but I'll give him credit. Everyone knows who I'm talking about. He's the guy who runs BlackRock. He's $11 trillion largest asset manager in the United States. I'll give him credit. He looked at it, thought about it, studied it, obviously had some people teach him about it and said, you know what, this thing's going to work. I either got to get on board or I'm going to get left behind. And he got on board. And I think that thought pattern is going to have to literally occur all throughout the world over and over and over again. And, we're so early. We're still considered fringe. We're still considered psychopaths and all the other things. There's still a lot of negative FUD, but it's starting to shift. I remember the early days of the internet, and a lot of people thought it was just a joke. But in the, by 78, 79, I'm sorry, 97, 98, you could see the connections were getting faster. The Windows browser was there. It was point and click instead of green screen. And we're kind of at that stage. When the ETFs went through, that was a hugely positive event. Huge. I mean, I had a lot of people who actually orange pilled right after that because their objection prior to that had been, well, the government's going to just kill this thing. Yeah, you're right. I get it. Sound money. I'm all for that, but there's no way the government's going to let you do that. And but the ETF got approved, and really, now look, we may have a counter reformation. I mean, it's very favorable that the Trump administration is going to be positive for Bitcoin, but if in 4 years we have a blue wave, they may come back and try and 6102 us or do a lot of other things, which is why self custody and so forth is important. But to me, it's obvious. I mean, the dogs are eating the food, and there are more dogs coming every year, and and the food's going up in price, which is what dogs like, and so it's a positive feedback loop that I just can't see ending anytime soon. It's the point in time. I mean, Saylor says this. He said he thinks the next 10 years are going to be a digital gold rush for Bitcoin. I think he's right.
Bitcoin's resilience continues to redefine market expectations, as seen in its Christmas rally to nearly $100,000. The cryptocurrency's price action highlights its growing status as a digital asset immune to traditional market pressures, a notion Lawrence Lepard passionately advocates. While Dogecoin slid and Ethereum wavered, Bitcoin's bullish sentiment, backed by increased funding rates and positive crowd sentiment, aligns with Lepard's prediction of a digital gold rush. Lepard emphasizes Bitcoin's scarcity and algorithmic supply cap, contrasting it with traditional commodities like gold, whose supply increases over time. This unique characteristic underpins Bitcoin's growing appeal, with institutional players like BlackRock taking notice. Analysts now eye $110,000 as Bitcoin's next significant milestone. But Lepard's foresight extends beyond price movements, focusing on Bitcoin's transformative potential to disrupt fiat-driven systems. As the global crypto market hovers at $3.43 trillion, Bitcoin exemplifies the shift towards decentralized value systems. Lepard's critique of fiat corruption and monetary policy finds resonance here. Bitcoin's rise symbolizes not just a market trend, but a fundamental rethinking of financial sovereignty. Amid this evolution, he urges skeptics to look past distractions like meme coins and embrace Bitcoin's profound implications for wealth preservation and sound money principles. In line with his views, the last Bitcoin's Christmas rally isn't just a seasonal cheer. It's a reminder of the paradigm shift unfolding in global finance, positioning Bitcoin as a cornerstone of a more equitable economic future. As we wrap up, what steps can individuals take to educate themselves about Bitcoin's implications for sound money and financial sovereignty? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.